Minasan, konnichiwa, Zamurai Engineer. Let us continue discussion of Chapter 5. We are now in Module number 7, Cost Behavior Analysis and Usage. We have the following learning goal: to reconcile variable costing and absorption costing, net operating incomes, and explain why the two amounts differ. So, in our example, we were able to get the income using the absorption method. The income is equal to $120,000. While when we use the variable method, the income is only $90,000. Okay, so there are two different amounts. Comparing absorption and variable costing. Here, number 1. Let's compare the methods. Cost of goods sold, variable, so 130,000 for fixed manufacturing cost and 30,000 fixed manufacturing cost, but under ending inventory. So 120,000 plus 30,000, that is $150,000 total for fixed manufacturing cost. What about variable costing? Variable manufacturing cost, we have 250,000, therefore we have 250,000. Manufacturing cost, we have 150,000. So 250 plus 150, that is $400,000. Okay, that is for our year number 1. We can reconcile the difference between absorption and variable net operating income as follows. How to reconcile? Variable cost net operating income at fixed manufacturing overhead cost differed in inventory, which we can compute to be 5,000 units times $6 per unit, that is 30,000. Absorption costing net operating income. Therefore, we have what? $90,000 plus $30,000. We have $120,000. Fixed manufacturing overhead, we have 150, and how many units are produced? 25,000. So $150,000 divided by 25,000 units, that would be equal to $6 per unit. That is for the first year. Comparing absorption and variable costing for the second year. We can reconcile the difference between absorption and variable net operating income as follows. Variable costing net operating income, $260,000. Deduct fixed manufacturing overhead cost released from inventory, 5,000 times 6, that is 30,000. Therefore, our absorption costing operating income is equal to $230,000. How about our cost per unit? Fixed manufacturing overhead divided by units produced, that is $150,000 divided by 25,000 units. And if you solve this, the answer would be $6 per unit. Let us observe years 1 and 2 using variable costing. Costing method, first period, second period, and the total. Absorption is 120 plus 230, that is what? 350. What about variable costing method? 90,000 plus 260,000. The total is the same, $350,000. Summary of key insights. Relation between units produced and unit sales. That is what? Either it is greater than, less than, or equal. So, what are the effect if we have greater than, equal, or less than? And we can also conclude about relation between variable and absorption. So let us proceed. What about if units produced is greater than unit sales? So therefore, we have so many inventory because we are producing, but the number of production is greater than the number of sales. So we have plenty of products in our warehouse. What if units produced is less than unit sales? This is a good business because we can sell more than we produced if this is possible. There are some specific instances that it might be possible. So if this is the case, our inventory decreases because we are just producing small amounts, so we have to cope up with the quantity of demand. Therefore, we have to get from the inventory, not only from the production, current production, and the finished goods. Okay. So what if the units produced is equal to unit sales? There is no change in our inventory because we produced equal to the amount that we sold. Just come in and process, then go out. There is no effect on inventory. How about the relationship between variable and absorption? So absorption is equal to variable because there is no change. Okay. NOI means net operating income. And that's all for the chapter number 5. If you have any question, you can use our comment section below. Again, this is Dr. EYPEI, preaching engineering for nation building.